A worldwide crisis shook the economy to its core. American politics in such upheaval that many Republican politicians turned on their president. The media demonized the president based on what they deemed to be serious, almost unprecedented scandal. The election was contentious, and a new Democrat president took the White House. He selected the most liberal member of the U.S. Senate as his vice president. With promises to heal America, the Democrat also promised to rapidly implement left-leaning policies on energy, climate, manufacturing, trade, and Iran. The old, hated policies of the prior administration would be shoved aside, and the Republican Party would be tarnished forever. If you think I'm talking about today, actually, I'm speaking about 45 years ago. This happened in 1976 with the election of Jimmy Carter after the House moved to impeach Richard Nixon. Carter ushered in a truly progressive agenda that dramatically impacted the American economy. Unfortunately, the Biden administration may be about to repeat the same mistakes as Jimmy Carter, only this time it will be far worse. Join me in the Economic War Room as we discuss one of the most severe economic impacts and why it may be returning. We'll be talking about inflation. In the late 1970s, we saw Jimmy Carter begin a new administration with promises of healing. But behind those words, there was a demonization of Republicans, and there was an effort to completely reshape the media narrative, demonizing Republicans. There are a lot of political similarities between the mid-1970s and today, but there are also some key differences, at least for the time being. In both cases, there was a global crisis. In the 1970s, it was an Arab oil embargo that shook the world economy. Today, it's a worldwide pandemic. But the economic impact has been similar, at least in terms of output and activity. One of the key differences, however, has been reported inflation. When Carter took office, prices had been rising at a stellar clip for a couple of years, nearing double digits at times. By contrast, the estimated inflation rate for last year was under 1%. Unfortunately, that may be all about to change. In the 1960s, inflation was low, but a global shock changed everything. In the 4 years of Jimmy Carter, the annual inflation rate rose from 5.7% before he took office to 13.5% when he left. A lot of this was due to stimulative monetary policy and massive government spending. Sadly, we see those same combination of massive government spending and stimulative monetary policy at work today, and it looks like it's only going to get worse under the Biden administration. So let's discuss a few of the policies that the Biden administration plans to implement that will directly impact you and stoke the inflationary fires. For starters, think about energy. It's essential to your well-being. If gas prices rise, your wallet is impacted. You use energy to heat and cool your home, to run appliances, and to fuel your transportation. When energy prices rise, you pay. The Biden administration wants higher energy prices to reduce consumption and make alternatives more competitive. Think about that. The Biden administration wants higher energy prices, so you'll reduce your consumption, and they want to make alternatives more competitive. The Biden administration wants to end the use of fossil fuels, even though they are by far the most economical choice at present. Even though Biden denied that he wanted to ban fracking, he said that in the debates. No, I don't want to ban fracking. There are dozens of times before that he said just the opposite. He does want to ban fracking. This would end the shale revolution and result in higher prices. It would even help Russian and Middle East oil producers. When you realize that the cost of almost everything has an energy component, you can see that higher energy prices will impact everything else. Beyond that, Biden has floated the idea of a $15 an hour minimum wage. That would be a direct and permanent increase in the cost of labor. Think about what that would do to startup businesses. If you want to go get some fast food, think of what doubling the labor cost would do to the cost of your next Big Mac. Then there's the issue of regulation. According to the Mercatus Center at George Mason University, the data show that a 10% increase in total regulations leads to a 0.687% increase in consumer prices. President Trump slashed regulation, but Biden promises to increase it. So a 30% increase in regulation, which is something we can expect, would add 2% to the inflation rate just by itself. Then there's the issue of higher taxes. Biden has endorsed an increase in the corporate tax rate from 21 to 28%. The problem is that corporations don't really pay taxes. They just pass them along in the form of higher prices to consumers, or they cut wages, or they cut dividends. But other things being equal, they pass along higher taxes in the form of higher prices. Now let's talk about free college and free health care. If you haven't noticed, your free Medicare benefits are taken from you with each and every paycheck. It's not free, and college wouldn't be free either. It will be taken from you in taxes. I suppose we could make more things free simply by borrowing money to pay for them. After all, we've increased our federal debt from $20 trillion to nearly $30 trillion in the blink of an eye. Yes, Joe Biden promises another $2 trillion in stimulus, and that takes us right to the $30 trillion mark. But at some point, this is going to cause higher prices because the cost of debt will undoubtedly rise. Think about your home mortgage with rates under 3% today. What if government borrowing causes rates to rise to 6%? That will nearly double the cost of your mortgage. It will also impact your rent because landlords depend on borrowed money as well. Of course, the Federal Reserve could continue to monetize the debt just to keep interest rates low. But in that case, a drastic increase in the money supply without corresponding increase in the supply of goods and services sparks inflation. Remember, the old-fashioned definition of inflation is too much money chasing too few goods. Think of it this way. If a dozen kids have $1 and there are 10 candy bars, the price of the candy bars is likely to be $1. But if each kid suddenly has $20 and the number of candy bars stays at 10, as you'd guess, the price per candy bar will go higher. An increase in the money supply brings inflation, but a shortage of goods and services can also cause price increases. Remember what happened to toilet paper prices when there was a shortage? The Biden policies will put a number of small businesses out of business. Entrepreneurs need access to resources and capital and cheap labor. At the same time, the Democrat plan for universal basic income will mean fewer people are incentivized to work. The net result is a less productive economy, meaning fewer goods and services produced. This too will result in higher prices. When you add it all up, Biden's policies are likely to result in higher consumer prices, and these price pressures will build over time. Inflation feeds on itself and can create a vicious cycle. If your personal costs go higher, you'll ask for a raise, which will create new price pressures. The same is true if your taxes go up. You'll want to earn more money and demand a raise. If you own a small business, you'll have to raise prices. Once the inflation cycle starts, it's hard to stop it. That's especially true when you're increasing government share of the economy. The more government, the more likely you'll have more inflation. We're going to take a break. When we come back, we'll look at the circumstances and threats that will multiply inflationary pressures during the Biden years. Before the break, we broke down why each of the Biden policies will make your life more expensive. What we want to discuss here is how there are forces beyond even Biden that will hammer your finances. First and foremost, there's a push by China, Russia, and other nations to dethrone the dollar as the reserve currency of the world. We've talked about this before. Because President Trump fought to put America first, there were efforts to preserve the dollar's value. By contrast, the Biden team values globalization. What you need to know is that the globalists, for the most part, view a strong dollar as an embarrassment. They don't want America to retain the primary reserve currency in the world. In fact, they've deemed it an exorbitant privilege. Why should 4% of the world's population control 25% of the world's economy, they say? One way to fix that would be to replace the U.S. dollar with a global currency. The Chinese, Russians, North Koreans, and Iranians have the same objective, but for different reasons. Each has been stung by American economic sanctions. Since the whole world trades in dollars, we have the ability to punish nations by cutting off their access to American dollars. Starting in 2008, Vladimir Putin's Russia began to agitate to remove the dollar from its preeminent status. He was bothered that the 2008 financial crisis started in the United States, but our Treasury benefited. When the panic struck, people rushed to purchase dollars as a safe haven asset, actually lowering our borrowing costs while other nations struggled. From that moment until now, he's been pushing to replace the American dollar. North Korea and Iran also have wanted to see the dollar's demise. For them, it's a matter of principle. It's also a matter of survival. Dollar-based economic sanctions have devastated their economies. The Chinese, on the other hand, wanted a strong dollar so we would buy their goods and services. They refused to join Russia in a 2008 financial warfare attack. In fact, they supported the dollar whenever possible. A strong dollar made Chinese goods less expensive in America and thus increased their market share. But the Chinese attitude changed in the year 2013. That's when President Xi Jinping came to power. At that point, it was coinciding with a government shutdown here in the United States. We had a budget battle and the American government shut down. At that moment, the official Chinese policy flipped. They officially called for the replacement of the dollar for international transactions. They began to promote the Chinese renminbi as the new reserve currency. The Chinese plan was derailed with the election of Donald Trump. President Trump began to take on China not only in regard to trade, but also in regard to investing. He stopped the thrift savings plan of the United States from investing in Chinese shares. He moved to eliminate many Chinese stocks from our market. His purpose was to put America first. The Chinese naturally hated that, but they still depended on dollars, and that gave Trump leverage. At the same time, however, China was undertaking a systematic effort to sideline the dollar whenever possible. They called this their Belt and Road Initiative. China has also built an alternative currency system. They've developed a Chinese alternative for international payments. They built an alternative to the World Bank. They have promoted and underwritten anti-American regimes. They've developed their own trading mechanisms. All of these started under the Obama administration without any American pushback. But under Trump, we reacted and we countered a lot of their initiatives. With Biden, we can expect the Chinese to press forward at an even more rapid pace. If you don't think the dollar is under threat, then take a look at Bitcoin and how well it performed after the November election. The price of a single Bitcoin was around $13,000 on election day. When Biden was declared the winner, the price started to jump, as shown in this chart from CoinDesk. Over the past 2 years, the Bitcoin price has stayed in a range mostly between $10,000 and $15,000. But following the election, and for the next 2 months, the price dramatically broke higher and it jumped to $40,000. Why? The answer is that people are making huge bets against the American dollar and they're using Bitcoin to do it. So what happens if the dollar loses value? Your prices go up. When a currency depreciates, by definition, the price of everything else goes higher in relation. If a currency collapses, the result is hyperinflation. That's what we've seen in Venezuela the past several years. It's what happened in Zimbabwe. It's also what happened in Weimar Germany after World War I. When great empires lose power, their currencies usually lose value. Here's an example. This is a $100 note from the Reserve Bank of Zimbabwe. That was in the year 1995. 10 years later, they were producing $100 trillion notes, and this wasn't worth a penny. In fact, I used to carry these around in Congress to warn them about the threat of hyperinflation. I'd carry those out and I'd give them to a congressman. You can't give me that. You can't give me anything of monetary value. I said, don't worry, Congressman. It has no value. It's worth a penny. Now I'm not saying that we're headed for hyperinflation or a full-on currency collapse. At least not now. What I am saying is that current conditions and Biden policies will shift things unfavorably, and that will impact your personal finances. This will also impact our national finances. At present, we owe nearly $30 trillion, and the government is paying an average of just a little over 1% in interest on that debt annually. Now, what happens if the interest rate goes from 1% to, let's say, 6%? We spoke earlier about how this might cost you more money if you took out a mortgage. But if interest rates were at 6% on a $30 trillion national debt, our total interest payments would jump from under $400 billion today per year to over $1.8 trillion per year. To put that in perspective, that would take half of all federal tax revenue for the entire year. We would be paying more in interest than we pay for Medicare or Social Security. We'd be paying more than twice as much in interest as we pay for our national defense, more than we pay in welfare or pensions or any other government program. And that's just 6% interest. There was a time when it was over 10% interest. That would suck up almost every tax dollar we could raise, with no money left over for government spending. And where would we borrow that money? From China? The Bible says that the borrower is a slave to the lender. If that's true, we would be further enslaved to China. We'd either have to drastically reduce federal spending or drastically increase taxes, which would further crush the economy, or begin a debt spiral that would almost immediately be out of control. The only solution would be growth, but that will be rendered nearly impossible under the Biden economic plan to increase regulations and raise taxes. As we shared earlier, the United States has about 4% of the world's population, but produces 25% of the planet's economic activity. Globalists would like to see Americans brought back into line with the rest of the world. Biden policies may help make that happen. In addition, massive additional immigration will help make that happen as well. Have you seen the caravans planning to cross our border? With our welfare system, these new immigrants will stream in, further stressing our finances. It's true, a proper immigration policy can actually enhance a nation's economic well-being. But uncontrolled immigration is devastating, and the caravans are demanding that Biden live up to his promises by letting them all in. At the same time, the Biden administration has promised a path to citizenship for all those who are in this nation illegally. That should encourage more people to come to America. All of this is a formula for the globalist dream, making America more average like the rest of the world. Let's try a better approach. Why not export American exceptionalism by teaching our policies of economic liberty, rule of law, and strong values? Sadly, the leftist progressive approach is to import globalism rather than to export Americanism. This is not a formula for American success. It's a formula for global mediocrity at best. And the more socialism we adopt, the worse the economic outcome will become. History shows that to be true, but sadly, we may have to relearn this painful lesson. We're going to take another break. When we come back, we'll take a look at what you may need to do to protect your family for the rough period that may lie ahead. Welcome back. We've just walked through some sobering economic realities. Before you fall into the pit of despair, however, take hope. If we can awaken enough people over the next 2 years, there may be an opportunity for a course correction before it's too late. We'll need to address election integrity, and we'll need to fight some very bad policies. We're fortunate that the progressives do not have exclusive control of either the House or the Senate. Yes, I understand that the rhinos are a problem, but Democrats have a very slim majority in both sides of the houses of Congress. And we can make our voices heard to minimize the damage. We'll have to act swiftly because the progressive agenda is pushing hard in the opening weeks of the Biden term. I know it's an uphill battle. I get that. But America and liberty are worth fighting for. And yes, I know there's a plan to crack down on any opposition, to demonize Republicans and any alternatives. We can hope that the Supreme Court will defend the Constitution. I know you're skeptical, and with good reason, but we can hope and work to make it happen. The key issue is we still need to fight. One way to fight is by weaponizing your money. We talk a lot about this in the economic war room, but now is the time for the rubber to meet the road. You need to make certain that your money is being used for your future and your values. There are 3 things you can do with your money. You can spend it, you can give it, or you can save or invest it. Most people have a grasp on giving their money. They give to their church or charities that line up with what they believe in. That's important. But how many people make their spending line up with their values? I can tell you that corporations are making political decisions now more than ever before. Just look at Twitter, Facebook, and Amazon and what they've done in relation to the election. Even before the election, Twitter banned the New York Post for daring to suggest that Hunter Biden was corrupt. They banned the oldest newspaper in America with the 4th largest circulation of any paper in the country. It's gone far beyond Silicon Valley, however. When Senator Josh Hawley said that he was going to challenge the electoral vote, Walmart tweeted out a personal attack. Granted, we later learned that that was supposedly a rogue employee who did that. But it fits the pattern we've seen from Marriott, the airlines, and many other consumer companies who've made it clear that they have disdain for the 75 million or more Americans that voted for Donald Trump in the last election. The left has weaponized their money for a long time. They threatened to boycott Mike Lindell's MyPillow, and they previously boycotted Chick-fil-A. I know it will be a challenge to look at your spending and try to align it with your values. There are some areas where you don't really have a choice, but you must at least begin the thought process and look for alternatives. And if we're right about inflation, you'll need to watch your spending very carefully. If we work together, we may be able to navigate these difficult waters. This will require good information sharing and some good advice from in-the-know, trusted advisors. Again, your economic future and our nation and liberty are worth the effort. And what about your investments? Are you prepared to address the coming financial changes? You may not want to follow a traditional investing approach if you know that inflation is about to rear its ugly head. We don't give advice on the show. We do recommend that you work with an advisor who can help you with your specific situation. But I can share from history and basic economics that a period with higher inflation creates a very different investment climate than the one that we've experienced the past few years. And wise investors stand ready to adapt as needed. Higher inflation is usually bad for bonds. We've been in a long-term bull market for bonds that has lasted about 40 years. If inflation returns with a vengeance, that bond bull market will end. Inflation can be good for the stock market overall, but only up to a point. Part of our stock market has been driven by something called TINA. That stands for There Is No Alternative, T-I-N-A. When interest rates are low, you won't put your money in the bank because it pays nothing. But if inflation causes interest rates to go to 5% or more, that becomes a lot more interesting. Why not have the safety of a bank rather than the risk of stocks? And you should know that certain stocks do better with inflation than others. Typically, during inflationary times, investors turn to real assets and hard assets. Companies that have pricing power also do well. There's simply some goods that you will pay for even if the price moves higher. Those stocks that are of companies that have pricing power will do better than the market as a whole during periods of inflation. A change in the economic climate is really a good time to get good financial advice. Over the past few years, many investors felt the good times justified being all into the stock market, so they just bought an index fund and the markets rewarded them. With what we're facing now, however, we may have to go beyond just getting good returns. You need to ask yourself, do my investments also line up with my values? Here's the point. You're living life, you're raising a family, you're trying to hold on to your job or keep your customers. I get it. Life is challenging, especially now. But if you go through all of this, you can't neglect your money. Jesus said in Luke 16:11 that if you can't be faithful with worldly wealth, who's going to ever trust you with true riches? We have a responsibility to use our money in line with our values. This is what we call weaponizing your money. It's bad enough if we're buying products from companies that are funding our demise. But what happens if you're funding them with your investments? Like it or not, this will be the biggest battleground from now until the next election. As we've explained, there may be lots of financial upheaval ahead of us, and the progressive left has a huge head start on capturing American investments for the globalist cause. The world's largest money managers have drunk the globalist Kool-Aid. Wall Street believes that it is a citizen of the world rather than a great American institution. As a result, Wall Street has been weaponizing your money at the corporate level for years. Did you know that NASDAQ now wants to allow only companies on their exchange that conform to their policy on broad gender and minority representation on their corporate boards? They would remove companies that don't have the right mix. Once that's started, they'll start mandating all kinds of things from the companies that list on NASDAQ. How long will it be before NASDAQ requires a company to make politically correct donations or forces a listed company to support certain political policies? This is weaponization of your money at the corporate level. What we're talking about as a response is weaponizing your money at the shareholder level and making your voice heard. When Twitter banned President Trump from their platform, Wall Street executives cheered. Then the shareholders spoke by selling their stock. Twitter fell 12% in the next trading day, and the company lost $5 billion in market cap. In the end, the money belongs to you, the shareholder, not to Wall Street. Now, you may be wondering how you can keep up with all of this. You want to do the right thing, but you don't know what to do or how to do it. Fortunately, there are some very good financial advisors who would be willing to help you weaponize your money to protect your values. The far left is promoting ESG, environmental, social justice, and governance. Those are code words for their radical agenda. Our polling indicates that most Americans would prefer LSV, liberty, security, and values. The bad news is that very few advisors know how to make the switch and help their clients. The good news is that the Economic War Room has partnered with Liberty University to train interested advisors. But we need your help. Our training plans were temporarily delayed by COVID and the election. But because of where we are today, the need for this training is greater than ever before. How you can help is by nominating your financial advisors to our program. Whether you work with a stockbroker, financial planner, insurance agent, or CPA, we want to help them help you. What we're asking is that you provide us the name and contact information of anyone who helps you invest, and then tell them about our training. That's it. To do that, simply go to economicwarroom.com/advisor. This will take you less than a minute, but it could be the most important thing you do today. Then, after you've done that, call your advisor and encourage her or him to take our upcoming training class. We've been in this fight a long time, and now our training has become critical. Advisors will be invited to join the National Security Investment Consultant Institute, or NSIC Institute for short. They'll learn how to help you protect your investments. More importantly, they'll learn how to help you weaponize your money to defend your values and our collective liberty. We're also going to develop a client track, because a lot of people said, hey, I want in on that. I want to learn alongside my advisor. So we're developing a client track for those who manage their own money. Everything we've talked about will be summarized in a free economic battle plan. You can get your copy at economicwarroom.com. Remember, what we see as a marketplace, our enemies view as a battle space. This is Kevin Freeman from the Economic War Room.